In this video, I'm going to show you everything you need to know about Fibonacci retracements and how to combine them with the RSI indicator to find small entries and exits in your trades. Here's what you learned today. First, how to plot Fibonacci levels properly onto a chart. Second, how to find high win rate trade entries using Fibonacci levels by combining them with RSI to confirm your trade setups. And third, how to properly exit your trades to get as much profit as possible. So without further ado, let's get started. What is a Fibonacci retracement? So, what exactly are Fibonacci retracements? They are key levels based on the Fibonacci numbers that help you identify where a pullback might end. We can find these levels by using a charting tool called the Fibonacci retracement tool. Now the question is, why should we use this tool for identifying pullbacks? Let me give you an example. Imagine the market is moving in a clear trend and you want to enter a trade. We know that one of the best times to enter in a trading market is after the price makes a pullback. When the price pulls back, you can plan to enter a buy trade near the end of that pullback, before the price continues moving in the main trend direction. But here's the big question. How can we tell where the pullback will actually end? A pullback often stops at an important previous level. Look at this example. The price moved up and then paused around this area, creating a level of resistance. Later, the price broke above that resistance and then pulled back. Notice where the pullback stopped, exactly at the same resistance level we marked earlier. That's why traders often say the pullbacks tend to end at key levels. But what if the chart looks different? For example, the price moves up and makes a pullback, but there is no clear previous key level. In that case, how can we know where the pullback might stop? This is where the Fibonacci retracement tool becomes very useful. So, when I apply the tool to one chart, you'll notice several key levels based on Fibonacci appear. These levels are generated automatically by the tool. As you can see, the price touched one of these levels and then bounced back up. Traders widely agree that price often respects these Fibonacci levels. How to use Fibonacci retracement levels. Now I'll show you how to use these levels in your trading. So, starting from the top, you have the 0% level. This is your starting point. Below the 0% level are Fibonacci retracement levels. These are levels where the price might pull back before continuing the trend. The most common retracement levels traders watch are 38.2%, 50%, and 61.8%. These three are often called the golden zone. But remember, there is no guarantee that the price will reverse at these levels. Sometimes it can break through these levels and go to deeper retracements like 78.6% or even 100%. Here's an important thing to keep in mind. Treat these Fibonacci levels just like support and resistance zones. Well, just like with regular support and resistance, you shouldn't immediately enter a trade just because the price touches one of these levels. You need to wait for a clear confirmation before entering your position. That's where the RSI indicator comes in, a powerful confirmation tool. RSI as a powerful confirmation tool. We use RSI to confirm whether the price is ready to bounce at a Fibonacci level. For example, if the price reaches a Fibonacci support level and the RSI crosses above 30, coming out of the oversold area, this gives a stronger signal that the price might reverse and start moving up. On the other hand, if the price reaches a Fibonacci resistance level and the RSI crosses below 70, coming out of the overbought area, This signals a stronger chance that the price may reverse and start moving down. How to use Fibonacci plus RSI. Let's look at a simple example. In this chart, the price is in a clear uptrend, making higher highs and higher lows. Then it starts to pull back. So we can apply the Fibonacci retracement tool to predict the end of this pullback. Now the next step is to wait for the price to show a reaction to one of these Fibonacci levels. As the price moves down, it reaches the % Fibonacci retracement level, a key level that traders often watch for potential reversal. Here it shows a slight reaction. This reaction doesn't mean you should enter a trade immediately, because the price can always react to a level and then break through it. We need confirmation. This is where the RSI indicator comes in. At the same time, the RSI, which has been below 30, now crosses above 30, showing that the market is coming out of the oversold area. This combination gives us a strong signal. The price has pulled back to a major Fibonacci support level, and the RSI confirms that the selling pressure is weakening. In this situation, you should consider entering a buy trade. Place your stop loss just below the swing low to manage risk, and set your taking profit near the swing high or the 0% Fibonacci level. How to use Fibonacci plus RSI in a downtrend. Let's look at a downtrend example. In this chart, the price is clearly in a downtrend, making lower lows and lower highs, and then it starts to pull back upward. We can apply the Fibonacci retracement tool to predict the end of this pullback. As the price moves up, it reaches the 61.8% Fibonacci retracement level, a key level traders watch for potential reversal. Here it shows a slight reaction. At the same time, the RSI, which has been above 70, now crosses below 70, showing the market is coming out of the overbought area. This combination gives a strong signal. In this situation, you might consider entering a sell trade. Place your stop loss just above the swing high to manage risk, and set your take profit near the swing low or the 0% Fibonacci level. Key takeaways. To sum up what we learned from this video, first, Fibonacci levels help you spot possible pullback zones. Second, RSI confirms if the price is oversold or overbought. Third, combining these two tools gives you better accuracy in your trades. And fourth, don't forget, managing your risk is crucial. So always set your stop loss and take profit levels properly. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you never miss a new update. Also, drop a comment below if you have any question or want me to cover a specific topic next. Thanks for watching and happy trading!